President-elect Trump did run a pro-crypto campaign, and his promises have helped boost digital assets as Inauguration Day approaches. Joining us now, the man who wrote the Bitcoin Standard, economist Saifedean Ammous, author of the aforementioned book, also the Fiat Standard, the Gold Standard, and the Principle of Economics. I owe you a lot, Saif. I got to say that, and it was a kind of a revelation that I had, I guess, going on almost 5 or 6 years, and I know you remember almost right at the very beginning talking about in ancient times maybe shells could be used, maybe we didn't know how to use money. We had no idea, and eventually they figured out a distributed ledger. If everybody on that island just kept track of what they did and everybody had access to it, you could basically create a form of money. And that's I think a distributed ledger, when you think of it in the context of Bitcoin, it's that simple. Blockchain.
Yes, thanks for having me, Joe. Yeah, I think Bitcoin is continuously proving its value to more and more people. More people are beginning to realize it. And as more people realize just how revolutionary and important this is as a monetary technology, more people buy it and the price keeps going up. It's been going on for quite a while, and I think it's going to continue because ultimately Bitcoin is a money that cannot be inflated. Nobody can make more of it. There's only going to be 21 million. That's it. And it's just such a simple fact, but it is so unique because no other form of money can credibly claim such a property. And that means that eventually everything continues to decline next to Bitcoin because you keep making more and more of everything.
And it gets a little bit far into the weeds, but I was looking at some of your comments here. I'm just fascinated by it. And we want to get back to the real world and what it means for people with regulatory issues and where we are in the genesis of Bitcoin. But you point out that fiat money and the monetization of debt, which every time the government does something, it's basically almost like mining gold, except in this case, we just increase the supply of the existing money to pay for what we're doing. And that's never going to work. And even when you're off the gold standard, gold has a stock to flow. We can only make so much per year, or produce so much per year. Same with Bitcoin until we hit 21 million, and then there's no more produced. And at that point, that will be the stake in the ground to value all other currency, right?
Yeah, and I think that's really ultimately what it comes down to. The thing that made gold money, why gold became money, was that it's supply.
It wasn't jewelry, Safe. It wasn't. Everybody thinks, and that's the misunderstanding of what money is. It's not because you can make a nice ring out of it. There's characteristics of why gold for 4,000 years has been used to represent value. But it has nothing to do with what it's used for.
No, it stores value well because it's very difficult to increase the supply of gold. It's very difficult to increase the supply of gold substantially. Every year, the supply of gold goes up at only around 1.5% to 2%. And so that means that people who hold it as money end up doing very well for themselves, and people who hold other things don't do well. And that is true for gold, and that's what made gold money for the whole world practically at the beginning of the 20th century. Then governments come about, and they use their debt as money. And since then, the average over the last 60 years or so, between 1960 and 2020, for 60 years, the average fiat currency grew in supply at around 14% per year. Or overall, fiat currencies grew in supply at around 14% per year. So we went from 1.5% to 14%, about 10-fold increase in the supply growth rate. And 14% per year means that on average, you lose half of the value that's stored in money over 5 years. So you lose half of the value of your money over 5 years. That's the average fiat experience. Of course, some currencies are better than the average, like the US dollar and euro. They only increase at around 7-8% per year. Some currencies are a lot worse. They increase at 20, 50, maybe 100 sometimes % per year. But on average, it's just continuously increasing in supply, so its value declines. And because its value declines, that incentivizes everybody to A, not save, and B, take on a lot of debt. And that's why everybody is in debt. And that's what Bitcoin fixes. If we go back to having a hard money, where money is no longer debt, we no longer need to be monetizing debt. We no longer need to get everybody to become a debt slave in order for us to have a form of money. We have a form of money that is just a commodity that doesn't require anybody to get into debt for it.
Stock to flow, you talked about it, and we're going to have you back because this could be obviously could be a semester-long Of course. But so stock to flow on gold is, what did you say? How much is produced a year? 1 to 2% increase, right? What is Bitcoin?
1.5 to 2%.
1.5 to 2. Bitcoin, the stock to flow, but it halves, so that changes. But where it is right now, what valuation would you put on Bitcoin?
It's a 0.8% annual supply growth rate. So every year now, for this 4-year period, we're going to be having a 0.8% growth. So that's half of the supply growth rate of gold. And then the 4 years after that, it's going to drop to 0.4%. And then 4 years after that, it's going to also drop by a half. So it's effectively heading to zero, practically, very soon. And the supply is not really increasing anymore. So from now on, anybody who wants to get Bitcoin, they need to work for it. There's no way for anybody to mine it. Or, there's no significant quantities of mining it. And that's a good thing. The good thing about money that isn't easy to make is that people have to work and to do productive things in order to make it. So everybody gets busy doing productive things. Whereas with easy money, where government can just print money, then you don't have to work. You don't have to provide society with value. You just got to provide government with an excuse to run the money printer and give you money. And then who needs to work? And so that's why I think we see a lot of economic problems in the world, because governments can just print money and hand it out to people who are not productive.
What regulations, what type of regime would make sense for you, and is that going to happen in this new administration for Bitcoin?
It's difficult to tell. I mean, they seem to be very positive about Bitcoin. It's difficult to say how much of their agendas they're going to be getting through. But I think, in general, I would say if I were in a policy position, the best thing that policy could do about Bitcoin is just to take a hands-off approach. Bitcoin is just software. It doesn't require the legal framework that is required for government money, because government money is inextricably linked to government institutions, and it's inextricably linked to the central bank and to government policy, and therefore it requires an entire regulatory framework. Bitcoin is not like that. Bitcoin is software, and so it regulates itself because it's voluntary software that anybody can choose to run on their computer, and they can choose to edit it in any way they want, and they can choose to propose changes to the software for anybody who wants to use it. So I don't think it requires the same kind of regulatory approach that fiat money requires, and I think it's pretty much regulating itself through the power of software and algorithms.